there guys, welcome to mock test 6, Amazin Limited. We can see that it's going to address internal controls, test of controls, and substantive procedures. Okay, so reading time 12 minutes. This is what you should have picked up. Background information. You are an audit trainee, so to note your experience, you are the trainee. You don't have that experience of a manager or partner. At Tick and Bash Auditors Inc., TNB, a large international firm of registered auditors. So large, I understand the size of my auditors, they're international, they can take on multinational clients. You have been assigned to the audit of Amazin Limited Group of Companies, Amazin, for the financial year ended 31 March 2021. So all I can see from that is that we have a public company and ultimately there's a group. So I've got the risk at the financial statement level because they have a group. So all of those risks, related party transactions, consolidation being complex, all the risks around that consolidation. So the risk that the accounting policies are not the same, but they're consolidated as if they are. The complexity of the consolidation, the goodwill for the holding company, if there is. And year end is 31 March 2021. TNB have been the auditors of Amazon for the past 2 years. So it's not a new client. They're continuing with an engagement, so I don't have all those additional pre-engagement risks. Amazon is a multinational technology company based in Ilovo, Johannesburg. So I can see now multinational technology. I'm starting to understand the industry, which focuses on e-commerce, cloud computing, digital streaming, and artificial intelligence. The company has been referred to as one of the most influential economic and cultural forces in South Africa, as well as South Africa's most valuable brand. So we're starting to understand the industry, the size, and based on its understanding of the size of the industry, having this large audit firm should be acceptable. Amazon has been operating in the industry since 2005 and listed on the Johannesburg Stock Exchange in 2012. So risk at the financial statement level because they have listed and are a listed entity. Two of those risks, that they don't comply with listing requirements, so they could face going concern issues if there's penalties or they are required to delist. And then also the risk that they materially misstate the financials to appear to be meeting the listing requirements when they're not. And a third risk, if you want, is the pressure to adhere to those listing requirements. Below is the Amazon Group structure as of 31 March 2021. So there's Amazon, Take Lots, Mrs. Transport, E-Fashion. All companies in the Amazon Group are incorporated in South Africa and have 31 March financial year end. So they've all got the same year ends, which is great. TNB audits all companies in the group, so this is also awesome. Just the only consideration is, do they have the sufficient capacity, capabilities to do so? While just noting the size of the company, we would think that they would. The Amazon Group prepares its financial statements in accordance with International Financial Reporting Standards, IFRS. The functional and presentation currency of all companies in the Amazon Group is the South African Rand, and the group materiality figure for planning for the 2021 audit has been set at 90 million. So 90 million planning materiality for the group. Take Lots and Mrs. Transport are both subsidiaries of Amazon and are accounted for in terms of IFRS 10 consolidated financial statements. So I can just make a note here that these are subsidiaries. The investment in E-Fashion is accounted for in terms of IAS 28, investments in associates and joint venture. So all I can see here is this is either an associate or a JV. You have prepared the following working papers for the partners review. Working paper, Amazon Investments, A1, Amazon revenue B1. So Amazon, this was prepared on the 16th of April, and it is the investments. Amazon has the following investments in the companies in the Amazon group. Take Lots Limited. Amazon acquired 100% share capital in Take Lots in September 2017. So 100% share capital in prior years. The acquisition was hailed as the most strategic e-commerce move of the decade because at the time, Take Lots was the clear leader in the local e-commerce market. The investment in Take Lots allowed Amazon management's insights into Take Lots operations, and after 3 years of developing and testing different business strategies, Amazon management believe that they have found a way to take the business to new heights. Amazon have entered into a management agreement with Take Lots where this new strategy will be implemented from 1 September 2020 at a monthly management fee of 40,000 Rand. So now I can see in the current year, 1 September 2020, there was an agreement for management fee of 40,000 per month. And what I now know is that there's a risk at the financial statement level because this is a related party transaction that might not be disclosed or at arm's length. Okay, we normally put it at the financial statement level because we're talking about in general. Guys, I'm actually going to rather change this to the assertion level because we know what it is, management fee income. So it's assertion level risk because I've got the specific account that's going to be affected, and then that it's not disclosed or at arm's length. I know also that it is a class of transaction, so it's going to be all my class of transaction assertions. Mrs. Transport. Mrs. Transport is a food delivery service operating throughout South Africa. Amazon purchased 88% shareholding in the company in June 2019. So once again, there is the proof that it is a subsidiary, but this was in a prior year too. eFashion, on the 24th of June 2020, so this is the current year, Amazon purchased 22% shareholding in eFashion, an online fashion retailer. So all I'm noting here, 22%. The investment in associates has been accounted for using the equity method. So there they show you, it is an associate. Equity accounted income that is included in the carrying amounts of the investments represents the group's proportionate share of the associate company's retained earnings after accounting for dividends received payable by the associates. So that's just saying that they are applying IAS 28. Working paper B1, Amazon revenue system. Amazon makes money through its retail, subscriptions, and web services. Online retail is Amazon's primary source of revenue, and as such, a system description has been documented below. So this is for its retail. Amazon sells the following items on its online platform called am.co.za. So I'm just going to make a note here. Online. We've got all the risks at the financial statement level because it's a computer information system, plus the additional because it's now online. I also now know that if we are able to, as auditors, we can use CATs. Media apparel, baby and child products, electronics, beauty and health products, industrial and scientific supplies, household and garden items, musical instruments, sporting goods, tools and automotive items, to name a few. Customers have to register a profile on ACZ's secure online portal by entering their name, address, email address, cell phone number, VAT number, and registration number if registering a company as a customer. So they have to register a profile, and they have to enter certain fields. So we've got mandatory fields. name, address, email address, cell phone number, VAT number, and registration number, and certain numbers, so there should be alphanumerical for those. The system does not allow for any duplicate data that already exists on the system. So there's going to be a duplicate check by the system. The system fields that have to be completed by the customers contain fixed field length and numerical parameters that will not allow data inputs if these do not adhere to preset parameters. So there we can see now there's going to be size, field size checks, and alphanumerical checks. In order to log in, customers choose a unique username and password. So once they've registered, they can log in with a username and password, which is access controls. A one-time personal identification number, OTP, which is valid for 5 minutes, is then automatically sent to the customer's registered cell phone number. So once again, another access control in the form of an OTP, and there is a time limit for use of that. On entering the OTP, the customer is logged in, which will allow them to perform the following: place an order, view order, cancel pending orders, view delivery notes, view invoices, download statements, and view outstanding balances. ACZ maintains a log of all customer activity once the customer has logged in correctly, so there's a log control. Customers have the option of changing their passwords via the online portal. All communications between customers and Amazin's online portal are subject to the strictest security protocol. New customers first undergo stringent credit checks. So here we've got credit check with the credit bureau as part of the application process, and if approved, Amazin sets the customer's trading credit limits on the sales system. So we've got credit limits or limit checks. And it's at this point, guys, that I'm going to say that there is going to be my revenue cycle. I'm going to say there is credit check, and then I'm going to put credit limit takes place. Once a customer places an order, so now I'm going to have the order, the system checks the order against the customer's credit limit before processing it. So there's that limit check. If insufficient credit is available, the customer is notified via email that payment has to be made before the order can be executed. In such cases, the order is listed as pending. ACZ keeps a log of pending orders, and the sales manager, Mrs. N. Nkulu, follows up on these with customers. Once payment is received, the status of the pending order is updated to successful, and a sequentially numbered order is automatically sent to the warehouse department. So here I've got my pre-numbered control, and I've got an auto control for the order to go to the warehouse. The warehouse is run by Mr. J. Zuma. On receipt of the sequentially numbered order, Mr. J. Zuma instructs packing staff to stack the ordered stock items on a pallet. Mr. J. Zuma checks the physical stock on each pallet against each order on his electronic tablet and entered his password on the system to indicate that the order has been correctly filled. So here we've got a recon that he does, a check, and then access controls to authorize that the goods match. The system then automatically generates sequentially numbered delivery notes which are sent to the dispatch department. So once again, we've got our pre-numbered sequential number control, delivery note goes to dispatch. So once we've got an order and it's been picked, there's the delivery note. I'm also just going to add you an auto control. Stock is delivered to customers from the company's dispatch departments. Each of the department's delivery personnel has an electronic tablet that contains the electronic delivery notes for the orders they have to deliver. These tablets are able to connect to mobile networks. Customers check the stock delivered against the electronic delivery notes and sign the electronic delivery notes on the tablet as proof of receipt. So we've got another recon here by the customer, and then we've got authorization, and this is where the risks and rewards transfer. The customer signs acknowledging acceptance of the goods. The electronic signature triggers the following actions: automatic completion of the delivery date on the delivery notes. We've got the auto date, uploading of a copy of the signed delivery notes and invoice to the online profile of the customer, and automatic updating of the sales account in the general ledger and the debtors subledger. So once again, we've got that auto, and now I can go and say, once they've signed this, there is sales journal and debtors ledger. Mr. J. Zama is also responsible for regularly downloading and reviewing the following exception reports. So we've got exception reports: unsigned delivery notes that have already been invoiced to customers. So over here we've got assertion level risk with regards to the occurrence of revenue, because if they've invoiced the customer but they haven't actually received the goods, should revenue have been recorded. And undelivered orders, which are indicative of long outstanding or unfulfilled orders. And so the review, we've got authorization and review here. ACZ is integrated directly with the company's financial accounting software. Amazon stores all its financial records, including master files, customer and sales master file, supply and purchase master file, staff master file, asset and liability master files, on a cloud-based platform. So this is online storage. Management of this cloud-based platform is outsourced to a third-party service provider with the appropriate technical skills. So here they use, or they outsource, the maintenance and management of the storage of financial data. There's huge risks there. I'll put them at a financial statement level. Let's have a look at the required.